up, everybody? Zinger Nation. Great to see you guys here again in another amazing session with Mark Putrino, Chief Educator at the Benzinga Trading School, former hedge fund manager for Steve Cohen, Mario Gabelli, chartered market technician, 20 plus years in the game. Glad to have him in the house with us. So that's pretty good. And good to see we have some people here on the stream. So let us know, guys, where you guys are tuning in. We want to get a good feel to see where you guys are checking in from. Trinidad, Winnipeg, London, Chicago, Texas, Croatia, Dubai. All right, all right. Interesting places there. Jersey, Zambia. Doesn't matter where you are in the world, you're going to have a blast today. You're going to learn something. You're going to leave this place with a better mindset, a better approach to trading, a smarter approach. Right? That's why we're doing this. That's why Mark is here. He's going to break it down. He's going to chop it up for you, basically. Suzanne, Chicago on the YouTube, Boston, G Money, Trading Style, Virginia. Yeah, the YouTube crowd is lit up today as well. All right, guys. So let me ask you something. Are you ready? Are you ready to start? Are you guys ready to start? Let me know when you're ready so that we can get this going, right? We have a great session planned out for you guys. I need to see if you guys are ready to start. Okay, I think you guys are ready. I think. Cypher, shout out to Cypher. Amazing student out there. Well, it's great that you guys are here. We have a special session planned for you guys. We were able to sneak Mark out of the trading school so that he can come with us and just be with us for the evening here, go over some trade setups, go over the markets, go over a couple tickers as well. A great session here we have prepared for you guys. I believe Mark is in the building. Is that correct? We're gonna wait here to see when Mark gets his mic and everything there.
Okay, everybody, I'm here.
Hey, what's up, Mark? How you doing?
I'm doing pretty good. How are you?
I'm doing great, man. It was a crazy day today in the markets. Thought we were going for a bigger dip and saw that kind of bounce back. So a lot to chew, a lot to digest. I'm sure you're going through all that stuff there in the trading school.
Yeah, well, a day like today, that's a day before a holiday. The volume it's typically pretty low. And the same thing will probably happen on Friday unless there's any kind of news that comes out. So the moves can kind of be exaggerated just because there's less volume there. So, we'll see. I don't expect much on Friday, but there could be some pretty significant stuff going into next week.
Yeah, there's definitely a lot of moving parts, but it's really good that the community there is on top of all that stuff, which does help, right? Trading with a community, right, of like-minded individuals and your leadership there. So whenever you're ready, Mark, feel free to go ahead and do a quick market overview of what you are looking into the markets, maybe any sectors or stocks, anything that's popping in your mind here and there.
Okay, sure. So I'm going to share my screen. And that person on the top of the mountain there is giving me vertigo, even though it's just a picture. All right, so
Yeah, Mark's getting set back up there in a little bit. I think we had a little mic issue, but go ahead, guys, in the chat. Tell me what you guys are trading. Tell me what you guys are looking into. I need to know what kind of stocks you guys are checking out. Just to get a feeling, right? Just to get touch temperature there. In the meantime, while Mark gets set up here. Jivo, bingo. Okay. Yep.
All right,
Couple
let me
tickers
just
there.
share my screen here and we will be ready to go.
Yeah, a couple people there shared some tickers there that they're looking at in case you do want to look at the tickers there and see what, some of these people are students already. They know you.
Okay, so we see lift.
Yeah, I can see lift. Everything's clear here.
Okay, cool. I just want to make sure.
Yep.
So let me just, I guess I'll talk a little bit about my background first. I spent about 25 years in the institutional trading world. As Rodrigo mentioned, I was brought into the business by Mario Gabelli, who's a really well-known portfolio manager. Mario pretty much does everything. You've probably seen him on CNBC or Fox Business. After that, I spent some time working for Steve Cohen, who is allegedly who the show Billions is based on. So he is, well known. You probably recognize his name too. So it was a real honor to work for those guys and trade directly for them. After that, I spent about 5 years in 3 different stints. Like I went to 3 different hedge funds where I was the head trader for about 5 years. And the money management industry is pretty chaotic. Things, blow up. There are things, sometimes you can even be punished for doing well. For example, I was the head trader at a fund that managed microcap stocks. Okay. The performance was so good that the clients became overweighted in microcap. So they took money from us because we did so well. So, it's a really tough industry and things changed a lot. So about 5 years ago, I decided this isn't for me anymore. But, I didn't want to just, retire and do nothing and hang out and, watch Matlock or whatever. So I decided I wanted to go into teaching because I see a lot of these teaching things out there that are, they're misguided or they promise things that are inaccurate, or a lot of times, sometimes they're just downright, fraudulent, frankly, just trying to get people to sign up and then get their money and then not worry about them anymore. So I met Rodrigo and Neil, and I came to Benzinga a while ago. It's been about a year now, and we started working on the trading school like last January and so forth. And now it's launched. And what I want to do is teach people about how the market like really works, not what you hear on television or what you see in social media about how people have these magical styles or these secret formulas that you can take $1,000 and turn it into, $10 million in 2 weeks. So I want to take the knowledge that I had or have in my experience and apply it to a teaching environment for students some of our students are real beginners. They've never traded before, and that's great because they don't need to unlearn anything. Other students are people that are more experienced, have been doing it a while, but have lost a lot of money. And, they realize they need to do it better. So we have a whole different experience level for our students. The only prerequisite to the class, the only thing that I ask is that you just come with a desire to learn. This isn't like I don't want to have it be like a trading idea mill where you come in, you get your idea, you leave, maybe it works, maybe it doesn't. In this class, we are teaching students how to think for themselves. And we focus on a lot of simple concepts. One is that there are certain price levels in the stock market, or actually, I should rephrase that, in any financial market that are more important than other levels. Okay. That's just one of the facts of the market. Institutional traders will tell you that. When we're trading, we're not thinking about really esoteric things or overly complicated things. We're looking at what levels are important. That's one of the main things we look at, because when something gets to an important level, it tends to move. And as traders, we want things that are about to move. We're not looking for stocks that are trading sideways or nothing's going on. We want things that are out of equilibrium, that there's an imminent move. So oil is one of the things that Rodrigo has talked about. And I'm sure if you have been in some of the webinars and some of the boot camps, you might remember that back in August, we had a webinar or a boot camp that was over the weekend. And I remember because I think it was a Sunday. I don't remember if it was Sunday or Saturday. But anyway, on the Friday, we see oil here. Okay. Now, I know you might not trade oil because you might not be a futures trader, but I can show you in a few minutes how to trade it in the stock market. If you only trade stocks, how you can profit from having exposure to oil. So what happened with oil? Well, it was closing in on a level that looked like, or that had been support before. Support is a level where there's so many buyers, or there's so much demand for the oil in this case, or in the case of a stock for the shares, that the price stops going down. Right up here, people that want to sell oil at say 65, they may not be able to do so. Someone might say, well, I'll buy your oil from you at $64 a barrel. So the sellers are forced to take lower prices. That drives things down. So anyway, we get to the support level. There's enough buyers to absorb all of the supply, or enough demand, and we see a big rally. So that was in May. So now we fast forward to August, right around when we had that webinar, and we said, well, you know what, there's a good chance that oil could rebound. Why? Well, it got to a level that was support before. When they say markets have memories, whoever they are, this is what they mean. Markets have memories. Oil found support at the same level in August that it did in May. So that, in and of itself, just understanding where an important level was enough to generate some really nice profits. A lot of the students or people that listened bought some of the oil stocks here, ExxonMobil, BP, because they follow oil. But more about that in a minute. So now we've had another good call on oil, and Rodrigo could even show you this when he shows you the trading ideas chat that all the students have access to. So oil goes higher, starts to go lower, and what do we say on Friday? Just coincidentally, it was another Friday. So on Friday, a week ago from 2 days from now, or 5 days ago, we said, what's going on here? Well, oil looks like it's getting back to a level that might be important. What level was that? Well, the 75.50 level was important resistance, right? So levels that were resistance can become support. Levels that were support can remain support. So on Friday, we all said, well, not that we all said, but it was a part of the discussion was, well, gee, oil has reached an important level again. There's a chance that it could bounce. So that was kind of the thesis that we had. Oil is at a level, it's been really gotten hammered. It's at a level that was important before, so there's a good chance it can be important again. And what happened? It got to that level and it bounced. So you might be saying, well, gee, Mark, that's great. I don't trade oil. I'm not a futures trader. That's fine. We look at how to gain exposure for regular investors, retail investors in the stock market. Now, this ETF, an exchange traded fund, the symbol is XOP. This is the Spider S&P Oil and Gas Exploration ETF, whatever the full name is. It's the Oil and Gas Exploration and Production ETF, so XOP. Anyway, this thing follows oil really closely. Why? Well, it is a basket of companies that are in the oil business. So if oil gets more valuable, those companies get more valuable because they own a lot of oil. So at the same time that we saw oil was bouncing, we saw that XOP was set to bounce. So a lot of the students got into this on Friday just by buying XOP. Some of them bought the ETF itself. Some of them bought options. 2 days later, yesterday, we hit our sell target, and it was a quick little 3-day profit. And I shouldn't say little. I mean, if you annualize this profit, even if you bought the stock at 90 at 100 and sold it at 102, 2% in 2 days, if you annualize that, that's pretty big. So I'm not here taking like a victory lap or trying to pat myself on the back or anything like that. What I'm trying to do is convey the message that in our class, we talk about things that are common sense and easy to understand. Important levels, important trends, and momentum. We don't worry about, like the weird stuff you've seen out there. We don't need to overthink it. Just by having common sense and logic, we can get good ideas on what to do. I'll give you another idea, which actually was just was a buy today. This is now on our buy list, so you can check it out and see how we come up with our ideas, or one of the ways we come up with ideas. And this is something that a student brought up. This is not my idea. This is something a student pointed out. This is Tops Ships, TOPS. To be perfectly honest, I had never even heard of this company before. Maybe somewhere in the past I heard of it, but I don't really remember it or anything like that. But as a trader, when someone showed me the chart back here, 4 days ago, so we can kind of pretend that this wasn't there. It's like, oh, gee, Mark, what do you think of this thing here? Tops Ships. I'm going to put it in the trend line right there. So this is the conversation was on. So today is Wednesday. I'm a little confused because of Thanksgiving, but all right. So this was Friday. So on Friday, someone brought this to my attention, or I should say someone brought it to the class's attention. Hey, this stock has had a big move lower, and look, it's reached a level that was support in the past. So as we have seen, levels that were support in the past can remain support. One of the things that happens when something reaches support is they rally if they don't break through. So that kind of gives us our all right, get ready, watch this, get ready. It's not saying pull the trigger and put your trade in now, but it's saying like, get ready and watch this. So what did we do? We got ready and we watched it. It was also oversold. This is a momentum indicator on the bottom here, RSI. Momentum is a term for how far a stock has moved in a particular period of time. It's not volatility. Something can be very volatile, but if it ends up at the same place that it started at, if you're measuring how far it's moved for momentum, it's going to show zero momentum. Momentum shows that, well, most of the time, a stock trades within what would be its typical or normal trading range. If it gets to an extreme below that, it's considered oversold. This indicator on the bottom here measures that. If this blue line gets below the red line, it shows oversold conditions. Why is this important? Well, because when something is oversold, that's going to draw buyers into the market. Buyers are going to say, well, this stock is oversold. I expect it to reverse to the average, so let me go there and buy. Look what happened the last time it was oversold in August. Well, it was the beginning of a big move higher. In July, it was oversold when it was at 127 and it got up to 141, which might not sound a lot, but by a percentage basis, that's really big. So now we have two things going on here. We have a stock that's oversold and that has reached support. So that is our get ready, get set. When we have a trading model or a trading idea, it should consist of three things. it should have your setup, which means these are the conditions that need to be met for you to get ready and get set. Like I just said, it should have your trigger, which is the starter saying go, which is your sign or your signal or your condition to get into the market and actually make your trade. And then the third part is to have your exit strategy. How do you take a profit or how do you take a loss? So for this particular stock, our setup was oversold and at support. Our trigger, the thing that says get into the trade, was we drew this trend line in here. This downtrend line was a break of this downtrend line. Now, when a stock is trending lower, the bears are in charge. When it starts going higher, this line we draw on here is just a graphical illustration. It's nothing mathematical or scientific. It just makes it easier for us to see that things have turned around. So let's just think about this. The red days are days where it's a down day. The opening is higher than the close. So on these red rectangles, the opening price is the top of the rectangle. The closing price is the bottom. So let's just say it's a game, a football game or an army. You know, the red army's in charge. They're pushing us down, taking over. Finally, we get down to here and the blue army or the bulls take a stand. And what has happened? Well, in a downtrend, what happens? Prices go down. Very simple. Now, it looks like the price is starting to go back up again. We see that graphical illustration by the cross of that trend line. You don't need to really have the trend line there, all right? It just makes it easier to see. But even if the trend line wasn't there, just think about this. Red's in control. The red team is, moving the football down the field. They get to the end zone. It's 4th and goal. They go for it. They don't make it. Now the blue team takes over and they start driving the ball back the other way. So that's why we like this trade here. We had our setup, we have a trigger. Some students are thinking about different places to have price targets. So the point I want to convey is that it's just very simple. Like nothing in this class will ever, at least I hope, will you ever sit there and say, what the hell is Mark talking about? And if if you do think that, I want you to ask me what I am talking about, because we're just talking about supply and demand. Stocks are always doing one of three things. They're going up, they're going down, or they're going sideways. The whole reason why you're here, the whole reason why you're involved in the stock market is to recognize when the trend is changing from down to up or from up to down. Here we have an example of how we can see that a trend is possibly changing from down to up. So this is an actual live trade that a lot of the students got into today. We don't hide anything or have any secrets. I'm explaining it to you the same way we talked about it to the class. And, this came from a student. This is not something that I found. Another thing I want to point out before, we open up for some questions or Rodrigo wants to make a couple statements or whatever, is this is a trade that we just had a successful closure on. So what I just showed you is we just got into it. I don't know what's going to happen. Could turn over. We could end up losing a little bit of money. We could make a little bit of money. We can make a lot of money. But the one thing that we learn in this class is that we never want to lose a lot of money. That sounds like a pretty obvious statement. Oh, gee, Mark, great. You're so brilliant. You don't want to lose a lot of money. I get it. And I understand your skepticism. But here's the thing, right? In the history of trading, as far as I know, there has never been a trading system that doesn't take losses. Every system there is, losses are part of it. So you cannot control if you are going to have losses or not. Unless you have like 190 IQ, or if you were that smart and you never took a loss, you wouldn't be listening to me now, right? But what you can control is the amount of the loss. So we never want to take a big loss. If something goes against us, we close it out for a small loss. But let's go back into this Duilio here, and I can explain why we got into a trade and why we got out of it when we did. So there's a couple similar things going on here. I'm just going to add volume to my chart. Oops. All right. Again, this is another idea that I am not going to claim for myself, because it was a student that said, hey, Mark, take a look at this. And I really think that class participation is really, one of the good things, or one of the beneficial things about our class, because I'm never going to see everything out there. I'm no super genius. People see things in different ways. People look at charts and see different things. Someone might look at something and see something I don't see, or vice versa. But anyway, someone brought this Twilio up, or Twilio, I'm sorry. I don't usually follow this stock. I've heard of it, I'm aware of the company, but it's just not on my radar screen of things I typically watch. So anyway, back here on October 28th, there was bad news. The company missed its earnings. So it had this massive plunge. So one of the students said, hey, Mark, check this out, man. This thing is massively down. It reached 283. That's right where the bottom was back in May. So what do we have? Just like we saw with Top Ships. We have a stock that is down and it's reached a level that was support. We also have oversold conditions. This is that same indicator that shows us that the stock is trading at an extreme below what would be its normal range. Look at what happened the last time it got down there back in May. It was the beginning of a huge move higher. So we have a big sell-off again. We have oversold conditions. And just to make it a little bit even more conviction, and some trades there's more convictions than others. This is one of the reasons why I had a lot of conviction in this trade, and I recommended it to people. See, we have this huge amount of volume trading here. Typically, this stock trades like 1 million shares or 2 million shares a day. For whatever reason on this day, the reason was they had the bad earnings, almost 22 million shares trades. So what does that tell us? Think about this. We have all this massive volume on a really big down day. All right, I will save you from thinking about it. What this tells us is that all the sellers are done. The sellers have thrown in the towel. The sellers have capitulated. You could be some hedge fund trader up here and you got 1 million shares to sell, and you sell 100,000 at 360, and you think, all right, well, if it gets to 361, I'm going to sell another 100,000, but then it goes to 355 and you sell another 100,000, and now you still have 800,000 shares left, and you've sold 200,000. You're waiting for it to go higher. Finally, you get to the point where you're like, you know what, enough of this. Screw it. I'm done. I just want out. So you tell your broker, just sell it, man. Just get rid of it. I don't care anymore. Just like you listening to me, you have to place your order through a broker. If you're a hedge fund or an institutional money manager, you have to place your order through a broker as well. That's the way the law works. Only brokers can make actual trades on actual exchanges. So as a result, you have all these people throwing in the towel. They're just throwing all the shares out. They're throwing out the baby with the bathwater, so to speak. And you have this massive amount of volume trading. So fine, big volume trades. Sellers are done. What does that mean? Well, when the dust settles and buyers come into the market and someone says, all right, well, I'm willing to buy stock. I'll bid 287. I'll bid 290. People might say, well, guess what? I'll sell you stock, but you got to pay up a little bit higher. Because all these sellers got washed out in this capitulation, now there is a lack of supply in the market. So you could come into the market and see the stock is trading around 290, and you could say, I will bid 290, sell me shares at 290. Someone might say, well, I'll sell you shares, but I'll sell them to you at 291. That makes the market go higher. That's the definition of a rally. is that there's not enough supply to satisfy demand at current levels. So buyers need to pay higher prices to entice sellers into the market.
Yeah, that's a very interesting concept there that you're always going through there in the trading school. I just wanted to note out here, Adnan is asking if if the trading school is included with Benzinga Pro. It is. I posted the link there for you guys in the chat. But basically, this is the Benzinga Trading School. This is what Mark is doing all day, going over the educational sessions. He's touching on a couple of chapters here, but in the school, everything is recorded, uploaded. There's a trade idea set up there. I can go ahead and show it to you now. I'll take the screen here really quick, Mark.
Okay, I think you might have said it backwards. Though. You said that that trading school is included with Benzinga Pro, but it's Benzinga Pro is included with trading school, right?
Yeah. But if you get the trading school, you will get Benzinga Pro, guys.
Yes.
What you can see here in the screen on the left side, this is like the home tab. And as you can see here, you have the home page. You can go in there, look at the upcoming events, all the prior classes, the recordings, the Q&A sessions, Friday office hours. This button that says live class, you click on it, it takes it to the live class. You have a chat room here where you can post questions about the actual material, anything that you're going over regarding the session. Then you have the video library, which I just selected here now. And the video library is going to show you everything, all the videos that are pretty much everything that's included as far as like the recordings of the sessions and all that stuff. These are the chat rooms. This is the trading chat room for everybody. And right here below, we have Mark's trade idea chat room. Anything you want me to point out here, Mark? I know the XOP trade right here, last Friday. This is the trade.
Yeah, today I put up Lyft. If you scroll down, LYFT.
Yeah, just want to show them the trades, the setups. It's all there. Everybody can see it. And clean and clear, guys. This is just Mark posting. Nobody else can post in this chat, which is great to give you clarity on trades. All right, we're at Lyft now.
Yeah, I like the Lyft, but we don't have the trigger yet. We have the setup. It's oversold and it's at support, but now we're waiting for the trigger. That thing that says get into the trade, get onto pull the trigger and buy it. And that would be a break in the downtrend or some kind of reversal pattern.
Yeah, and this is included. We are including Mark's trading chat room as a courtesy in the trading school. This is separate, but we're including it with the trading school as a courtesy here. And you have all access to the boot camp recordings. Those are like 10 hours or something like that. Very educational. You get access to that. And here you just click Pro. It takes you to Pro, which is included. So just for all you guys asking questions, I don't want to take too much time up with this because I do want us to focus on the education. So just wanted to show you guys how this works, what it has and all that stuff. And we can go ahead with the education there, Mark, when you're ready.
Okay. Okay, so we're back to Lyft. So one of the things that we do in the class, it's one of our lessons, lesson 5, is we talk about different ways to look at the market. And one of the biggest problems I think people have is coming up with ideas of how do we know what to trade? Where do we get ideas from? So we always start with the SPY. And this is just my personal preference, the S&P 500. To me is the benchmark index. Some people follow the Dow, some people follow the NASDAQ, but we always start with the SPY. So this is the SPY, and we could see, well, what's kind of really going on here? This is a really broad gauge of the markets, the S&P 500. Well, we could see really the market's really gone nowhere since November 5th. I mean, on November 5th, SPY was around 470. Here we are on November 25th, 3 weeks later. SPY hasn't really moved. So this kind of just keeps it in perspective. So we look at this because, sometimes if you look at the social media, you'll hear like, oh, the market's raging, blah, 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 blah. But if you look at a chart, it keeps in perspective. Like, today was a big move higher on light volume, but it's still below where we were a few days ago. So then we start looking at the sectors. The S&P 500 is like a puzzle, and there's 11 pieces to it, 11 sectors. The biggest sector is technology. We follow that by looking at the technology sector spider, which is XLK. Now look at this, right? There's some important action here this week. On Monday, we had this big move lower, right? Remember, we go back to the whole team concept. The blue team is in charge. They're driving the ball higher. All of a sudden, the red team makes a goal line stand here. And at the beginning of the day, the market was up here, or this ETF was up. But by the end of the day, it had been turned all the way around. It was what we call a reversal. And now we are below this downtrend line. So even though we had a big day today, it's still below where we were 2 days ago. So do we think a new downtrend is going to start? Well, we don't know. But if one does, this is going to be the first sign. So we're going to have to watch this really closely over the next few days. This is the technology part of the market. The second biggest part of the market is the healthcare sector. So we can follow that sector by XLV. This is the ETF that follows the healthcare sector. It was in this sideways trading range for about 3 weeks. Now it looks like it's starting to break down below it. One of the things we did as a class back in, this is right when we kind of first got started here, right at the end of September, was we were watching this ETF because it was in this downtrend. And what was it doing? Well, it was getting close to a level that had been resistance before. This 125 level was resistance from May through the very end of June. Levels that were resistance can turn into support. And that's sure enough what happened here. So a lot of the students said, well, this thing is heading down. It's at a level that could be support, meaning there's a bottom. How do we know when to get into it? What's our trigger? Our setup was that we had reached support. The trigger was the break of this downtrend line. So a lot of the students got into it here around 127, 128. The students that trade options did extraordinarily well. And then we just followed this uptrend. Same thing like we did here. We followed a downtrend. Now we follow the uptrend. And when the uptrend broke, that was the time to close out the position. So again, just by looking at simple levels and trends, nothing, that sophisticated. You don't need a PhD in econometrics or financial science to figure this out. If you have a little bit of business savvy, a little bit of street smarts, back on the floor of the stock exchange, which is kind of obsolete now, but I'm sure you've all seen how all these people are on the floor of the stock exchange running back and forth trading. Believe me, I can tell you from personal experience of knowing a lot of those guys, a lot of them are not Harvard graduates or not Yale graduates. A lot of them are like, kids that grew up on the streets that could do numbers in their heads that, if they didn't become floor brokers, they might have been like, numbers makers or bookies. But just, you don't need to overthink it. And the vast majority of the industry does. Wall Street likes to make stuff sound complicated so they can charge big fees for it in general. I'm sure most of the people listening right now will agree with that. But what did we do here? We didn't really do anything that special. We saw that we were in a downtrend. We were getting close to a level that had been important before. We thought there was a good chance that the trend would turn. The breaking or crossing of this line was a graphical illustration that it did. And, we got in, and this led to some really significant profits over the course of a month. I mean, from October 14th to November 4th, this thing went up from 127 to 135. Annualized, that's a huge, huge, huge return. So how did we find this? Well, we found this by just looking at the different sectors. One of the things we were looking at today was this communication services sector, which is, I believe, the third biggest. Now look at the action here. This just broke important support and it hasn't really come back yet. Made a little bit of an effort, but is still below this important level. This sector is primarily Facebook, which we can see is, breaking down a little bit, and then Google. These are the biggest parts of it. The two companies with the fake names, right? Facebook is really called Meta whatever, and Google is really called Alphabet. But another example here of a clear level, right? See, we got up to 3,000. I mean, just knowing what an important level is enough. Well, I shouldn't say that, but it's a big part of being able to make successful trades. Where did Google stop this recent sell-off? Well, look at this. Right around a level that was support resistance back in early September and late August. So we have an example of a resistance level turning into a support level. Now, people might say, well, that sounds pretty weird. How does that happen? Well, the traditional reason is you have seller's remorse. People sold Google here. They thought they did a good job. But when it went higher, a lot of them say to themselves, well, I want to buy this thing back, but I don't want to pay more than I sold it for. So when Google starts to drop and they see, oh, this is back close to the price I sold it at, let me go out there and buy it. I can buy it back at the same price. And if enough of these remorseful sellers who are now remorseful that the stock is higher place buy orders, it forms a support level. And that is what happened here. So as students of the market, and what I want my students to learn is when you look at a chart, you're not just looking at squiggly, randomness. You're looking at what's important, what levels are important. Where is the support? Where is the resistance? And after a while, people really start to see that. Look at this chart here on Amazon. Okay. You want to talk about a chart that has important levels. I mean, this is Amazon.com, right? You've all heard of it. It's a monopoly. I use them all the time. Trucks in my driveway pretty much twice a day. But let's look at Amazon. What's an important level? Well, let's look at 2,980. It's pretty much right where the bottom was in September of last year, in November of last year, and March of this year. What's another important level? Well, I'm going to get all this off here so we can just look at it again. So let's look at, if you're looking at this chart, it might just look like a bunch of squigglies to you, right? But once you get a little bit of trading experience, it's like, okay, well, here's an important level. Don't let the simplicity of this make you diminish it. It's important. So understanding where these levels are is the key to a lot of things. I mean, people that are market makers make a living off just knowing where the level is to buy and where the level is to sell. So we got this level down here around 3,000. We have another level up here that's important, which is, right where it peaked in last August. So last August, where does Amazon peak? Right around 35.30. Where does it peak in April? Okay. What is that? 8 months later? To this, pretty much to the same level within a few dollars. In June, the same thing happens. Then we have seller's remorse, right? People sold it. They regret it when it went down. Now it goes higher. They want to buy their stock back. So what was a resistance level converts into a support level. Stock goes down. Now we have the exact opposite. What was support converts into a resistance level. This is because of buyer's remorse. Investors who bought here thought they did a good thing when it went higher. But when it goes lower, a lot of these investors say, I made a mistake. I want to get out of this thing, but I don't want to take a loss. So they say they will sell their stock at the same price they bought it at. So if there are enough of these investors placing sell orders at the same level they bought at, what was support becomes resistance. So we can see that this 35.30 level is important once again. We can also see how the 31.90 level has been important support. So now Amazon is playing with this level again. It looks like it broke through it. And guess what? What level has been support over the last 2 days? You know, what was the low trade on Tuesday or yesterday? 35.27. What was the low trade today? 35.36. I mean, considering we're talking about a stock that is trading at over $3,000, to get within 3 or 4 points is really pretty remarkable. You know, it's really remarkable how this stuff works. We could even see another important level here, right? Where did Amazon recently find resistance? Well, pretty much the same place that it did in July. So if we step back and we look at Amazon, well, we can identify some important levels. This one, this one, this one, this one. Well, why is this important? You're like, all right, Mark, well, I believe you. I get it now. Some levels are more important than others. So big deal. What does that mean to me? How does that help me? All right, say you bought Amazon down here. All right, and it starts going higher. You bought Amazon at 3,300. Starts going higher. It's at 3,500. It's at 3,600. It's at 3,700. You tell yourself, you know what? I'm going to sell my Amazon if it gets to 3,800. So you place your order here. Well, guess what? It never got there. Now it's reversed. It's $300 lower, and maybe it keeps going way down to a point where you actually end up losing money on it. By not knowing there was this important resistance level and just guessing the stock would get to up here, you missed your sell. So if you know where the levels are that are important, it can help you with order placement. Had you known this was a resistance level, you would have placed your order around 3,700. It's not as good as selling it at 3,800, but it's better than not selling it at all and watching it fall all the way back down. So understanding where important levels are helps you, one, know when to buy and sell, and two, know when to sell and buy. You don't just want to guess. You want to know what levels are important, and that can help you with your order placement. All right, so that's Amazon. Anyone else got some specific questions there, Rodrigo? I don't know if
you're a couple of the requests from the chat members. One of them was AMD.
AMD. So this thing's been really on a tear. All right, so we can see kind of the same principle here. Remember what I said, it's not usually that precise, but we can see here, just for educational purposes, what was resistance became support. But now, this stock is at a level that it's never been at before. So people are probably wondering, like, where do I sell it? What is my sign? It's not going to get to a resistance level because it has never been this high before. So just by definition, there can be a resistance level. So say you bought it down here and now you're thinking about, well, where should I sell? Well, there's a couple things you could do. You could look for a trend line break. We could draw on the uptrend. So say we had it like that. You would have sold it when the trend line broke a few days ago around 155. It might be a little bit higher today, but you never know. It could start going down again. You could make a decision to sell because it is very overbought. Let's put in that RSI indicator again. See, it shows overbought. You could wait for a reversal pattern, meaning the stock starts to roll over, right? You can see that trend reverse. So here's the thing with the stock that is up at a level it's never been at before. And I get this question a lot. How do you know when to sell? The question is, the answer is you don't know when to sell. You don't know what price you're going to sell at, but what you should have is some logical explanation for why you sell. You could say, well, if it breaks the trend line, I'm going to sell. If it has a reversal pattern, I'm going to sell. If it becomes extremely overbought and then reverts, I'm going to sell. You could have a trailing stop, meaning if you have a profit and it goes up and you lose, the stock goes down 3 or 5%, then you sell. So the point I want to convey is this: is you don't want to just guess when to sell. You want to have a logical plan in your mind that keeps you from guessing. Because if you guess, you're probably going to have you might get a couple wins here and there and you get you psyched up and started. But if you're going to bet guess, eventually you are going to lose. The market is like, playing the house if you're a gambler, right? It's like, yeah, you might have some victories, but the the house is always going to win if you play the game the way the house wants you to. So, you get these stocks that are going up. You wonder where to sell it. You have a plan. If it gets to that, then you pull the trigger and you sell it. Maybe you leave a little bit of money on the table. You might not sell it at the exact high price. Like, for example, if it keeps going up and then it breaks the trend at 170, goes to, like, say 165. But it's all about playing the odds. And if you have an uptrend, like, say we would put this here now, we would readjust this. If you're just trying to get the top, you're just guessing. But if you have some kind of an exit strategy, then you take the emotions out of it, and it's going to make your life much easier. And it's also going to probably make your strategy much more profitable.
Yeah, that's what I hear a lot, Mark, from new retail traders. When I started trading, I was making every mistake in the book, had to pay the tuition, obviously a lot more than the trading school, but that's not the only way, right? Because now there are things like the trading school which didn't exist, like a year ago or anything like that. So trading with a plan, trading with a strategy, absolutely, that is the best way to help retail traders, because ultimately they find themselves in very high risk plays and really trying to use this as a lottery machine, right? Instead of being successful consistently, right?
Yeah. If you always hear people say things like this, like, the market is like gambling. And that's just not true, at least if you're doing it right. If you're doing it right, you have some kind of a plan. Gambling, to me, is you're just guessing. Gambling is you play the lottery. Gambling is you play a slot machine. You're just guessing. Maybe you'll win. The odds are you won't. Let's look at gambling in the context of being a poker player. Poker is not gambling. I'm not a poker player myself, but people that are successful poker players, they're not gambling. They know how to keep track of the cards, what numbers have been played or what cards have been laid out. They can read the other players' emotions. They can tell when someone, might be bluffing or when someone's not bluffing, or, when to show your hand, when not to show your hand. That's a skill. That's not gambling. That's why there are poker players who can consistently, outperform. Same thing with sports betting. There are people that make a living betting NFL games. Well, maybe they know that, a particular player doesn't perform well on artificial grass or artificial turf when it's raining under a certain temperature. Or, it's the point is, it's not just guessing. It's educated speculation. And that's what we want to do in the market. We understand that, we make ideas or we make insinuations that are wrong. But what we do is we stack the odds in our favor. If something is oversold and if it's at support, well, there's a good chance it could bounce. Is it guaranteed? No. But there's a better chance that an oversold stock at support is going to bounce than a stock that is just trading neutral in the middle of a range. So we look for things that look like they're going to have imminent moves, and that's where we try to make our profits. And another thing is we also learn how to be okay with being on the sidelines. You don't always have to be in the market. And I think that's one of the biggest mistakes newer traders make. Call it, over trading, call it addiction to trading. You don't always need to be in the market. It's okay to like on Friday, it's okay to close out all your positions and not look at the market on Friday. I mean, I'm going to try not to. I probably will, but I'm going to try not to. It's okay to be out of the market. I think a lot of the newbies, feel like they need to be in it. And then you get this snowball effect. Like if they lose, then they just start throwing money at the wall and hoping something sticks. And then, the losses become this snowball effect and they end up, effectively blowing up. And, when I say blowing up, I mean, they lose a major part or most of their savings. I mean, that's a blow up. And, I'm
That's
confident
pretty
if you
common.
take the class and you listen to what we teach, that will not happen to you.
Yeah, that is a common thing that I hear talking with thousands of retail traders around the world. Just, like what issues typically do you find yourself struggling with? And it's pretty common. And then, once, because they're very new, you get into high risk type of trades, like, doing risky calls and not understanding calls. And because you really cannot get into options or crypto, Forex, whatever, if you can't read a chart, if you can't trade the chart. That's the most basic thing. Even though it sounds basic, it's not that easy, but that's the fundamental, right, skill set that you need if you want to be successful. Because if you're just trying to do options without knowing how to trade the chart, that just means you're going to lose more money. So the goal here is to help you become successful long term, regardless if you're trading crypto, options, stocks, forex. I think there's even some forex traders with you, Mark, right?
Yeah, definitely.
I mean, yeah, it's all over the place. So these are the fundamentals that you are going to need to become a good trader, pretty much. And I mean, Cypher on the chat on YouTube, uh, flexing on the XOP trade, saying thank you, Mark. Cypher DMG.
Yeah. Cypher has been a very active student. And so we appreciate the input.
Yeah, that's very nice to see the community get, like just getting better, seeing the results. You probably see it more because you're Monday to Friday there, obviously.
Well, the thing about having the student community is it's, like pretty much anyone, including myself, you have a tendency to just become, laser focused on what's in your world, right? Now, like, Cypher just talked about the XOP trade, right? I would have seen XOP because I follow oil. It's just one of the things I do. For 20 years, I've been following oil. But these other trades, like the Twilio, um, you know, like this is not a stock that's on my radar screen. I probably would not have seen this trade. The tops, we still don't know if this is going to work out or not, but this is not something that is on my radar screen. I probably would not have seen it. So by having the community, it really helps. Now, let me just to like throw a little bit of a quick history lesson there for myself. When I was in business school, I went to NYU back in the late 90s, right? Um, for my master's in finance. I literally, this is an exaggeration, but I literally remember two of the classes. I mean, I have some kind of memories of some of the other classes, but two really stuck out for me that I still use to this day. One is public speaking. The class was every class, you just got to get up in front of the class and speak, which sounds easy, but people are afraid to speak in public. The other class was taught by a gentleman by the name of Larry Zicklin, who was the head of Newberger and Berman at the time, which was a huge money management firm. I don't know what happened to Larry. I assume he became a big philanthropist, donated tens, if not hundreds of millions of dollars. But anyway, so he's either retired or maybe he's not even with us anymore. But this was the class. This was the ethics class that I took with him. Okay. He would come into the class with a Wall Street Journal. Back then, people still had actual newspapers. And he would put it on the table and he would say, everyone form a circle. We would put all our desks together. We'd have a big circle, maybe 30 students, and he would look at the newspaper and the class with ethics, and he would look at the headline. Say it was today, supply chain issues hinder, whatever. And then he would say, all right, let's think about the ethics. What are the ethics? Is the supply chain being hindered because, well, there are truck drivers that don't want to get vaccinated, blah, 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 blah. I'm not saying that's here nor there. The point is it would become this open-minded brainstorming discussion. And people got confident enough that they could say something that they thought, well, I'm just, being free, right? Like, well, is it okay to trade on inside information? Well, no. Well, what if, your child is about to die of starvation and the only way you can make money is trading on insider information? So it would just go into these brainstorming things, and it became a whole class participation thing. And I kind of want to have our class based on that, because you get insights that you never thought you would have gotten coming from other students, not just from the professor. So that class, which I took, 25 years ago, is a big influence to how I want to teach the class now. And that's why I want the students to be so involved. Like, we're all kind of in this together. Yeah, I mean, I'm the professor or the teacher, but, we're all in this together.
Yeah, and it's very important to remind really your schedule as a hedge fund manager there under Cohen. Really, the schedule, like, in the morning you have a meeting, right, to discussing trade ideas and things like that. That's basically what you're imparting and doing with the trading school members there, in a sense.
Yeah, in a hedge fund or an institutional money manager firm, people have different roles. The analysts support the portfolio managers. The portfolio managers manage the portfolios. That's why they're called a manager. They make their decisions. We're going to buy this stock. We're going to sell this stock. The traders are the ones who are the eyes and ears into the market. Like, an analyst day is spent, in their office, reading 10Qs and earning statements. Some people love that stuff. To me, that would be, so boring. The trading role is you're talking to people in the market. What's going on here? What do you see there? It's going back to that poker game, because say I have a big order that can move the market. My job is to be able to put that order in and get it executed without moving the market. So that's when it's like, who do you talk to? Who do you trust? Who do you not trust? So the trading is the eyes and ears into the market. So what I try to do is, we would have that meeting every morning at 7:00. And I would tell people, here's what's going on in the market. And maybe some people will come up with ideas. Maybe they wouldn't. Depends on if there's a lot going on in the market, it's a lot easier to come up with ideas. If there's nothing going on in the market, well, maybe you have a day where you don't have any ideas. So I kind of look at it the same way. We come in, we look at what's going on, and we kind of brainstorm together, and we see like, oh, hey, this sector is down. Oh, well, hey, some student sees, hey, Mark, within this sector, this tops is really down. And now it's at a level that was support before. Maybe we should buy it. So people say, like, I'm sure, Rodrigo, you get this all the time. Like, do you give trading ideas? It's like this whole class is based on trading ideas. But it's not me like saying, oh, buy this, sell that, buy this, sell that. This whole class is based on how the students can learn how to come up with their own ideas. We're not here talking about support and demand and resistance and trend lines, just for the hell of it. We're talking about it because it has a practical application to the markets and how we can make money. So this whole class is based around, trading ideas. Sometimes we come up with some real concrete ones. Like, I think this tops is a pretty concrete one. So this is a class where my goal is to teach people how to think for themselves. It's not like a trading idea mill, so to speak.
Yeah, and one thing that I definitely think it's important to note in general as traders, retail does not move the markets. We're just in for the wave, Big money is moving the market. So Mark Putrino having traded, with big accounts under Cohen and Jabelli, that is the system that you want to replicate, right? You want to trade and you want to think about your trades the way that big money does, because that is where the trend is going. So it's great that retail has the opportunity to be able to talk to Mark full pretty much every day, right? And get that trade idea chat room as well that we're putting in the trading school. So the feedback is great. People are learning. They're making money. I mean, I'm pretty happy with that.
Yeah, I am pleasantly surprised. We're considering we've only been doing this for what now, 2 months. I think we're way farther ahead of where I thought we would be, and I mean, in the sense that maybe our students are smarter than I thought they would be, are more attentive, but it seems like people are picking these. Some people are picking these ideas up pretty quickly, and they've already have been able to translate it into helping, helping their methods or making their methods better. So yeah, man, I'm really stoked. I'm really happy about it. Things are going, like, had you asked me in September, Mark, if this is where we were on November 25th, what would you think? I would have said, I don't know, man, that's kind of pushing it. But it seems like things are working out well. And I think, like I said, part of that is that this isn't just me preaching to people. This is like encouraging students to exchange ideas. Like Seifer, if Seifer is still listening now, Seifer's been talking to people about, maybe getting together and using some programming skills to come up with some indicators. It's a never ending class. It's not, I know we talk about A classes, but it's not like you take A classes and then it's like, see you later. It's something that's just going to go on because the principles are always going to be the same, but the market is going to change. The market we are looking at now is not the same market we're going to be looking at in 3 months. A lot of the ideas we're coming up with now are these things where we see stocks selling off and finding support. Well, that's just where we are in the market cycle, right? In 6 months from now, it might be the opposite. We might be seeing things that are overbought at resistance. So the fundamentals don't ever change. The fundamentals of important levels, important trends, momentum, that's not going to change. But what is going to change is the market. So that's where we take our fundamentals and we apply them in real time. I mean, like I said, this top ships here. I never even heard of this stock until Friday, and now there's a chance some of the students make a nice profit off of it.
Small cap. Well, I mean, you've traded. You have in the funds you've been. You have traded large and small caps, which, I mean, retail is all over the small cap. So that's pretty advantageous, I'd say, for the members there. Cypher already paid off his subscription like 3 times, and Allah is saying,
all right, well,
on
drink
2
on
lessons.
Cypher. I think Cypher is in Canada, so I don't know,
Yeah,
Rodrigo. Maybe me and you got to go on a road trip.
maybe. Allah says he's about to make the membership already in 2 lessons, something like that. Well, I mean, yeah, something, and a lot of retail traders might think that, for example, there is, like you say, a holy grail, right? And because everybody wants that shortcut to success, right? Everybody wants that quick one answer, that 1-2 thing, and it's just not like that. It takes time, experience, and even knowing these things doesn't mean that you're gonna apply them in real time if you don't have the discipline for it, and keep these things in check. I'd say,
Yeah,
Mark, for
like,
sure.
yeah, people that aren't in the industry think that there's like this holy grail. There's like this secret method that the great traders have that's infallible. And it's just not true. It doesn't exist. At least as far as I know. And I'm someone who's, traded shoulder to shoulder with some of the greatest traders in the history of Wall Street. And it just doesn't exist. Stevie Cohen loses money on trades. Mario Gabelli loses money on investments. Ray Dalio loses money on trades. It is part of the game. there is no secret formula. The secret formula is having the emotional discipline to have a plan and to stick with it. But if you think that you're going to ever stumble across a system where you never lose money, good luck. It's just not going to happen. The odds are greater that you would win the lottery. Paul Tudor Jones is another great famous money manager. I never worked with him or for him. I did play basketball with him at the Y in Greenwich a few times. That's another story. But anyway, there's this quote that I came across where Paul Tudor Jones. Now, keep in mind, we're talking about a billionaire. We're talking about a guy that started with nothing. I think he was in the Marines. I think he was a boxer. He went into the pits in the Amex, I think in the late 70s or the early 80s. Now he's a super duper billionaire. I read this quote. He's like, you will always buy stocks that go to zero, and you will always sell stocks that go to infinity. Of course, he's being a little bit hyperbolic, but he is stating that you could be the greatest money manager in history. You're still going to make mistakes. You're still going to buy stocks that go down. You're still going to sell things before they're done going higher. Rodrigo, how about this, right? Babe Ruth has more strikeouts than any other baseball player in history. People don't really realize that, but think about that. Babe Ruth struck out a lot, but he's still the greatest baseball player in history.
This is how I look at it, Mark. This is how I personally look at it. Failure is part of success. There's no success without failure, right? You have to get your feet wet, take a look around, see what's going on for sure. I want to give a shout out here to Adna for just joining here, the Benzinga Trading School family. Shout out.
Oh, welcome. Thank you.
Yeah, there's definitely a lot of things happening in the market, and I can tell you that trying to do this on your own can be pretty bad for your account. And ultimately, following somebody that's done it, and not like these social media kids or anything like that, or these Wall Street bet stuff. Actually having a process, a with stop losses, responsible trading, right? So that's pretty awesome.
Yeah. I mean, look at it like this, right? I don't want to age myself because I feel pretty young and I think I'm pretty immature, which is a good thing. But, I'm 52. I've been doing this for, 30 years. Anyone who's been doing this for the last 10 years, they've never been in a bad market. They've never seen a bad market. COVID was bad, but that was what, a month or two? The people that are successful are the people that can be successful through multiple cycles. They can make money when the market's going down. The rising tide lifts all boats, right? So, if there's some young hotshot who has some system and over the last 5 years, they've done very well. I mean, that's great. And, maybe when the market turns around and starts going down, which it will eventually, they might not do as well. So that's just, something to keep in mind. Unfortunately, experience only comes with age, but I don't know, man.
Well, I mean, it's just it's the way it is. Like, for example, look at it this way. If you are going to have, let's say, as an example, a brain surgery, right? Do you want a rookie, fresh, right out of the college dorms to be doing surgery on your brain? Or do you want somebody with 30 years in the game who knows, who's done this before many times? That's how I put it, because your money, your savings, you work hard for that. So you obviously want to put it in the right place, right?
Yeah. I mean, there's no substitute for experience.
That's why it's good to have you there, because you've done it, right? But because look, when I was a retail trader, I was trying to figure out what was my groove, right? I dipped on penny stocks, weekly calls, things that I really didn't understand, and until I started to read the charts, just like I'm reading a book, and understanding the language, the behavior, the human investment
Were you
psychology.
mostly a day trader?
Yeah, that's what I've been. Day trader,
But
swing
like,
trading.
before you started to learn, when you had your blow up years ago, you were a
Yeah,
day trader?
yeah. It was day trading. I was trying to figure it out on my own without a community. And then, eventually I stumbled here at Benzinga, but it was definitely a boost in learning curve having that community and learning how to read the chart. Because if you don't know how to read a chart, it doesn't matter what you're trading, a penny stock, crypto, or stocks. If you can't read the chart, you're going to lose money, more times than you win. So that I think would have been the best place to start. But like I said, nothing like this was out there, right? A daily school with an instructor going over sessions every single day with office hours, Q&A sessions. I mean, it's just unheard of. So if anybody's new, this is the way.
Yeah, yeah, I think the practical application to the actual markets, I think, is something I haven't seen before, because I've read every technical analysis book that there is, pretty much, at least that I know of, and it's all the same thing. It's all like, well, last June I said this was forming a triple top. Well, guess what? Last June, everyone is a genius in hindsight. That's why books are infallible. I think what's good here is we are looking at the market in real time, right? I like to use this analogy of boxing, or it could be anything, anything. Like, well, let's just look at boxing. You could do all the push-ups you want. You could jump all the rope you want. You could lift weights. You could work out on the heavy bag. You could think you're ready to go, until you get into the ring with an actual other boxer. You don't know what boxing is. You know what I mean? Like, you need to get in the ring to really know what's going on. So by looking at things in the market, as opposed to saying, well, like, let's go back to this tops, right? I could say, well, gee, I called the peak and top back in February when it was at 370 because it was so overbought. Let's look down here. It was an obvious signal. All right, well, great. That's hindsight. That's 2020. Everyone can do that. But can you make money off of hindsight? No. Now we're looking at something in real time, in real application, right? We have a stock that has reached an important level. It's oversold. And now, this is a real idea. It might not work out. And you could say, well, Mark, it didn't work out. Maybe you don't know what the hell you're talking about, but it's like a real time thing here. We're putting our money where our mouth is. We're not, saying, well, back then, if you did this, that would have happened. And back then, if you did that, this would have. And like I said, some of the trades have worked out very well. As a matter of fact, I don't think we haven't really had anything that's really blown up, because we stick to our principles. All right. Like, one of the first trades I recommended was Bristol Myers. And I'll show you exactly why. Well, Bristol Myers got down here and it looked like it was going to reverse, and it was oversold. So we thought about this as a trade idea. But guess what? It didn't work out, right? It didn't get that rebound. So it went down a little. So, as some of the students, some students that were actually able to scalp a little bit of a profit, but some students took a small loss on it. No one blew up. No one blew up. At least they say they didn't blow up. But if they stuck to their guidelines, people would have had a small loss, maybe, a 2%, a 3-4% loss.
Mark, so this is low risk, high reward scenarios, basically.
Yeah, what we want to, we go into trades where we think of this, right? High probability. There's no such thing as a guarantee. We want the odds to be stacked in our favor. Sometimes they don't work out, like this Bristol Myers. So we took a small loss, just like Babe Ruth might have struck out the first time he was up at bat. But then, we have other things that come along, like this Verizon, for instance, where it was a home run, right? This Verizon is a very interesting story here. I've never seen anything like it in my history on Wall Street. This is a big stock. It's Verizon, right? It's who I have my cell phone service through. Trades millions of shares a day. back in early October, and that's why this is like one of the first trades we did, because it was right after the class started in late September. The stock just collapsed for no reason. We looked at all the news sources. I listened to the company's conference call for their earnings. No news. So something got really whacked out of equilibrium here. So we were watching it and we thought, well, gee, this is probably going to rebound. What will be our trigger? So on October 13th, we were watching this, and right around 11 o'clock in the morning, the downtrend reversed, and a lot of the students got in here. Some traded options, some traded stocks. We had this nice move higher. A lot of the students got out here. Now, one of the students said, I said, all right, well, where are we going to put our sell target? Someone said 55. And I said, well, why do you want to have your price target at 55? They said, well, I don't know. It's a nice round number. Okay, great. 55 is a nice round number, but logically doesn't make sense. So I pointed out that there was pretty significant support at 54 going back here into February, and then, through September. Levels that were support can become resistance. Remember, buyer's remorse. Investors buy here, the stock goes down. They say, damn, I made a mistake. I want to get out of this. I'm going to try to sell it. So what we discussed as a class was, does it make sense to have our sell order at 55? The answer was no. There's a good chance it gets up to 54, it hits resistance and rolls lower. So what we did was, as a class, we said, let's put our sell order at 53.75. Okay, below where we thought there would be resistance. Now, not everyone works out as perfect as this one, but sometimes they do. It reached our price target and we sold it. So we had a nice, the stock went from 51.23 to 53.60. Option traders made some money, double, tripled. Then to kind of continue the story, later on, it came out here that Verizon was delaying its 5G. So, my guess is maybe back here, someone found out about that and they wanted to sell ahead of it. But at the time, there was no clear news as to what was driving this move. So, something strange happened in the market. Something got knocked out of equilibrium. When things are out of equilibrium, they have a tendency to revert. That's what happened here. So this is another example of, a trade that's just based on common sense and logic.
Yeah, this was like a short swing, and I remember when we were talking about Netflix, right before that big run, it was actually in one of the workshops, NFLX. I remember that you were talking about the consolidation, the upward movement, and pretty much that nice run there. I happened to get some calls with that one, and worked out pretty well.
Cool. Yeah. Okay. So we can see another example here. Going back to our discussion on levels. What was resistance right around here? This 643 level became support. So we see yet another example of an important level. And look what happened on Tuesday. What was the low? 646.05. No, that's the wrong day. The low on this day was, maybe it was 646. It's hard to see because it's a bigger scale. But anyway, the point is we have another example of resistance turning into support. So, if Netflix gets back down to around 640, there's a good chance it bounces again from a shorter term perspective. I'm not talking about where it's going to be in 5 or 10 years, but we can see an important level. What was resistance may become support. So, all right. So, Rodrigo, I got to kind of bow out here. I got to go to my other job, meaning my family. as much as I'd rather stay here and talk charts all night.
Yeah, sounds, no, I understand, Mark. So appreciate your time here helping all these members and viewers and everybody how to navigate the markets. Any closing remarks here on why everyone here should join or at least try the trading school here so that they can join the sessions and trade with you there?
Well, I think the two main things that actually, there's three main things that I want to point out. One is that I just happen to have a lot of experience because I've been around the block a lot of times. So you have a teacher who has been in the institutional world or was in the institutional world for a long time. When they're talking on TV or on the news about what happened on Wall Street, what didn't happen on Wall Street, I can most of the time tell you they're right or they're wrong. The second thing is that we look at actual markets in real time. We're not looking at books, and we don't have the advantage of 2020 hindsight. And the third thing is that we emphasize how there is no right system for everyone. You have to develop a system that is right for you. If you're someone who's high energy and you love the markets and you want to look at training every day, and you have a job where you can, or you're retired, maybe you could be a day trader. But if you have a job where you can't look at the screen all day and maybe you can only look once a week, you might have a longer term strategy. If you're someone who's mellow and you want to be more cerebral and dig into 10Qs and earning statements, that's another thing. So there's no one size fits all. So we have an experienced teacher in the community. We have real-time application. And then the other thing is we teach people how to do what works for them. And I think that is a big thing, Rodrigo. I think a lot of people try to emulate someone else, and because of that, they don't do well, right? Like the example I always bring up is, Tom Brady's a great quarterback, but if you made Tom Brady a linebacker, he probably would not be that good. So you have to do what works for you.
Yeah, I definitely agree with that, Mark. All right, well, let's do this. I'm gonna go ahead and share the screen here, Mark, and I'll see you very soon here in the trading school. Thanks for being here with us and everybody here. Very thankful as well of you helping us out with the markets.
All right, cool, everyone. Thank you so much for joining in, and I hope to see you on Monday morning.
All right, all right. Thanks a lot, Mark. Okay, guys. So I'm just gonna show you the trading school really quick. It's on my screen. This is the homepage where I was telling you guys. Live class, library, chat rooms. All of these are Mark's trade ideas. These are the setups that he was talking about, including XOP. You can see that right there on the dates like we showed you. But there's several trade ideas right here. I mean, and these are coming up almost daily. So that's on top, right, of the education that you're getting on all the lessons. This is where you have all the lessons saved. If you do miss them, if you have like a 9 to 5 or you live, somewhere abroad, you're able to view the recordings and you're able to take advantage of that lesson, of that education. And you have the chat rooms as well to connect with all the other trading school members that I showed you. And the second thing was Pro, that is included with the trading school. So this is the Pro Essential. It is included. So I mean, as long as you have the trading school, you will have Benzinga Pro. So if you guys have any questions, throw them out in the chat. We're going to be closing the stream here in a little bit. Just going to answer a couple questions there if you guys have any. And I'll throw the link there so you guys can join Mark's chat room, Mark's trading school here. Hey, you're welcome, Cypher. Good stuff. I mean, you're in the school, so we'll see you there anyways, right, tomorrow. People are in the chat room there talking about some trade ideas. I don't know if you saw that. Alpha, yeah, you have to create your own trading plan. It does come with a laptop. That's correct, Antonio, right? Yogi, you're welcome. All right, guys. All right. So I posted the link there. I'll leave the contact if you have any further questions on how to join Mark, the trading school here that we have with Mark Putrino. Thanks for joining here, guys. And we'll be leaving the stream here for a bit. Thanks for joining here today. Have a good day, gentlemen.